Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Trent, a very interesting retail company. Let's see whether the evaluations are attractive or whether it has run up already, depending on the kind of numbers that it is producing. So, let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Trend, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, it will help you also ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and also a number of podcasts that I put up probably every alternate days, and I try to increase the number of podcasts there. Be a part of Patreon. Also, if you want a detailed analysis on market or a number of companies, etc., for yourself individually, then you can email me directly and we can work things out. Now, about the company, formally established in 1998, Trent is focusing on providing consumer products in a retail space similar to what DMart does, but on a lower scale. One of the top fashion retail brand with apparels for everyone, so they are more into clothes, etc. DMart is more into products which are related to FMCG and food even. Have multiple retail malls across the country. The market cap of the company is around 15 to 20,000 crores. If you look at the numbers, and these are Q4 numbers, although Q1 numbers have come up, so I'll talk about that as well. But the Q4 numbers were interesting. Sales went up by 22% to 843 crores. Profit went up by 400% to around 33 crores, and that is why it was trading at 150 160 times earnings. Debt has increased arguably, so that was a worry in our case. Return on equity was around 7%, whereas operating profit margin at 18% was good. So in terms of return ratios, return on equity is not that great, whereas operating profit margin is decent at 18%. EBIT margin has tripled by around 3 has tripled, so it has gone up 3x in that March quarter. Now what happened in June was sales dipped to around only 250 crores, one third of what they used to produce, and they had a loss of around 145 crores versus 32 crore profit in the previous quarter. So we saw that how the numbers turned negative virtually in just one quarter, and this is the quarter in which there was 45 days of total shutdown. So only half a quarter was used to produce the sales, and there was absolute, I mean, no movement of people, everybody sitting at home, etc. So the sales had to come down. So what I believe that we have to look at the March numbers, and probably going forward next March could be the same, and things could normalize, and people are looking at FY20 to for example FY22 numbers, etc. In that regard, the fall towards 500 450 was a very good buying opportunity when it came to Trend, but has run up at the moment. So all this taken into consideration, let's understand whether one should get into the stock or not. So the positives is leadership in fashion and retail segment is there in Trent. Owning stores nationwide, so it is prevalent in you can say metros as well as second and third tier cities, and expanding nationwide, and people are liking the way to buy apparels and other products from malls rather than online. They like the way they touch products, etc., and that is why probably when it requires more people to visit their stores, it is extremely necessary for economy to open up for this kind of sector to really do well. There's a strong profit and sales growth that has taken place over the years. We have seen over the last 4 or 5 years it has grown multifolds. Top management backing of Tata, so it's a group of Tata. Although I don't like companies that are backed by Tata, they are more a lot of consumer as well as, you can say, employee friendly. But even in that case, some of the companies of Tata are doing very well. We have seen how Tata Global Beverages, erstwhile TGB, has done well. Trent has done well as well. There's longevity of business. There's no doubt that the business would flourish even going forward. There is lesser penetration in terms of malls and such stores, etc. in India the way it is abroad, and quality is selling at premium at the moment, and we have seen that happen with DMart. We have seen that happen with uh, other FMCG. You have Britannia, etc., and there are many companies trading at 80, 90, 100 times. A trend had been trading at 140, 150 times, got reduced in March and really sold big time, and that was time to get into. At the moment, it has run up a bit at around 600 rupees. The risk attached by buying such a share as Trent or into the retail segment, it is trading at a PE of 140 even now. Even if we consider better numbers, say from the second half, even at that, even in those circumstances, I believe that the stock is trading slightly. I mean, it is trading expensive at the moment, and see, growth may be curtailed even after the complete lockdown is opened and things normalize. It will take time. Now street is pricing in that things will normalize from FY22. What if this whole pandemic doesn't end by Jan Feb, and although the vaccine would come out, yet I mean, by everyone, you can say the retail people or the common man getting the vaccine, and then having the immunization done, it will take at least a year more. So you could see a washout of FY22 as well. In that case, we could see another round of selling. So anything can happen in that regard. So in that sense, there is a risk. Results may remain subdued, at least I mean for this couple of quarters. Yes, we could see a subdued range of results. Even for the next 4 quarters, we may not see 4 6 quarters, we may not see the results, the kind of results we have seen in March of FY20. So you have to take that into consideration, that things might not be the same, and things could be extremely difficult going forward in FY21. Low promoter holding is a concern in this stock, and valuations are stretched. It's not that it's trading at 50, 60, 70 times, it's trading at averages, it's below 400. So all these are risk, because whenever the fall will come, it will be very severe in such companies. uh, then malls and such stores may not see footfalls for 6 8 quarters, and that is what I am saying, that yes, in 2 quarters things will normalize on the FMCG front, on other segments where essentials are needed, say insurance, etc., would do extremely well. But to going to recreation places, to going to places such as malls, cinema halls, or stadiums, etc., this may well take something like 2 years to really get back to normal once vaccination is done throughout. So uh, interest burden will keep increasing as debt has increased. So all these are risk when you buy a company at around 600 rupees, and I think most of you would agree with me that considering the kind of valuation, there are extreme risk involved. If you look at the technicals of the stock, then there's strong support around the 400 levels. Currently, the stock is trading around 600, so it has gone up a lot. So you can say a long-term support could be around 500. It has already run up 50%. I think most of the stocks have run up, so you have to consider that. Uh, I believe that the run up is irrational in many of these sectors, especially in the sector that Trent is working in, and we could see a decent correction. So from these levels, there could be a very big correction that could be coming in. Yes, major breakout is trading at a very interesting level, and there could be a major breakout that would coming in, or there could be a strong resistance out here. So as I mentioned, there could be strong resistance around this 600 620 band, and we could see a resumption of a downside. So be very careful. At least wait for corrections closer to 500 levels to get into. Um and even if you get into, you have to take this into consideration that next 1 year could be extremely tough. So the stock may trade in a range. There could be a breakout, there could be a breakdown as well. So have money on the side to add on. This is a good 2-3 year play in my opinion, not a short term play, and that you could lose a lot trading into the stock. The 200 DMA is around 550, so keep a stop loss there. But going forward, you buy with the risk that I have already told you in mind, and only then get into such stocks. So what needs to be done? Buy close to 400. So wait for major declines. It has run up quite appreciably, and probably if you have bought it at the lows, then it's better to book some profits at these levels rather than buy into this company. Yes, it could surge even from here, but valuations is something that I'm not comfortable with. If you compare it with DMart, then DMart is a totally different kettle of fish, because it has no debt, it has their own land. I mean, all those stores that DMart has is their own land. Then they have the backing of Radhakrishnan Damani. Then you have big investors invested into the company with large stake, probably over 90% stake nearly, with those investors who will not sell for 5, 8, 10 years, with the promoter, their promoter group people or their families, etc., and large investors invested into the company who are friends of RK Dawani and all those things. So these things do matter, and here the promoter holding is not that huge. We have the Tata thing going on, and the valuations are stretched, so you cannot compare both the companies. If you compare it, DMart is way ahead in my opinion, and the valuations are same. So this is where I believe that it is at an extremely rich valuations. Look for massive falls to accumulate, and then you will make money, but look for major declines like the decline we have had in February, March, and only then get into such companies. Better to buy other reasonable valued consumption companies rather than getting into something like a trend. And I believe that there are many that are available, and I talk about them a lot of time. There are many in white goods, many in retail, in other segments of consumption, niche consumption as well, electronics, contract manufacturing, etc. So it is a good long-term buy. Long-term buy, I believe that around 2 to 3 years or 5 years, it is good to just buy and you'll make decent money. But if you are looking at 1 year time frame, then uh, you could be more in red rather than green buying at these levels. So this was my video on a trend. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.